Following on from the non-fault video we did about approved repairers, third-party intervention insurers repairing your car, giving the car back to you, there's something else you can claim other than your personal injury, the credit repair, the credit hire. There's something else that normally gets missed unless they're really sharp about the claim. Is something called diminuition. Diminuition means that once you get your vehicle back, it's been repaired, let's say it was worth 20,000 prior to the accident, and you get it back, it's now worth less money. It's had an accident, it's been repaired. Regardless how well they've repaired it and what they've used, and if they've used manufacturer's parts to repair your car, it is worth less. Why is it worth less? Well, the statutory regulations on law, if someone asks you, you don't have to tell them, but if you go to sell the vehicle and someone asks you, has that vehicle been in an accident, you are obliged to say yes. And we would, the insurance company would look at that as a used car sales room. We use all trade and commercial that we look at. We wouldn't look at a claim and say, well, my car's worth less because I'm trying to sell it to Dave, and Dave said it's worth less. If you took that into a commercial showroom, a used car dealership or manufacturers, and gave them the car, and they would devalue your car over it not being repaired. So they'd say, yeah, it was worth 18,000, you brought it in, but it's had an accident, so I'm going to give you 16. You've lost money value on that vehicle. Now, not specifically saying that you would then go to sell that vehicle and lose money, because one, the person might not ask you. Secondly, they might really want your vehicle anyway. Thirdly, a lot of cars in the market are being repaired. It's just nature of driving a car. So, but in law, in court and through the court's settlements, there is a diminution can be applied to a non-fault accident on a vehicle that's being repaired. So, how do you go about claiming diminution, and what do you get back? Well, you tell the accident management company, solicitor, or your insurance company, or the at-fault insurer, if they've caught you on, captured you on third-party intervention where they're dealing with you direct, that you want to apply for diminution on your claim. Now, they might do this on your behalf anyway, and it's a bonus and you get it back. But if you don't hear anything, question them and say, are you claiming diminution on my vehicle? If they say, well, they say, no, I want to do it. You can do it directly in writing, or better to do it through an insurer, a solicitor or a claims company, but I would apply for diminution. The reason why they don't really push this, a claims company will get their credit hire, credit repair and personal injury claims back quickly. Diminution takes a little bit of to and fro in with evidence, so it's admin work and they're there to make money, so sometimes they don't do it. But you want the cash. So if you've got a car worth 20,000, say trade or retail or trade value, because that's what they'll probably look at, say it was worth 15,000 trade and you get 10% value back, then you're going to get 1,500 back, so it's worth doing. So what do they claim when they go to the insurer for the diminution? Well, a standard claim would be for 12% of the value of your vehicle prior to the accident, and predominantly done on trade, because it's done on a view of part X in it with a dealership. So you get 12% they'd look for. An insurance company will come back and argue this. You don't have to get in the middle, they'll do it between them. Sales will come back and probably try and get it at 8%. Fantastic result for the insurer if they do, but predominantly the claims are settled around 10%. So the worst case scenario, you're going to get 8%. Best case scenario, you're going to get 12%. But I'd say 99% of the cases are done at 10%. So you're going to get 10% of the trade value of your vehicle back, as though you were going to sell it, as a bonus on top of your claim. And it's well worth claiming for. Now, does that mean your car's worth less money? Technically, no. Certainly you don't tell them, certainly you don't discuss, but actually when you go to sell the vehicle, no, not many people, unless it's deadly obvious, they don't really ask you, has this vehicle been in an accident? If you go through a trade route and you put X in it, they're trying to sell you a new car anyway, so they're going to give you the trade, it won't affect your trade price on the vehicle, so they won't bother about that unless, again, it's been badly repaired, and on a non-fault case it's not going to be. So that's diminution. It's a bonus for you. Claim it every time. It might take you a little bit to get it back, but it's a holiday, Christmas presents, whatever. I hope that was of benefit. If you've got any questions about this video, please do put a comment below. I'll answer it as fast as I can. And if there's any other video you'd like to see or information you'd like to see regarding motor claims, and there's a lot of areas in claiming back on an accident, please put it in the comments. I'll look at it and make a video as fast as I can to answer your question. Thank you very much. Hope you subscribe and you've enjoyed the channel.